Hello, thank you for joining us to review the audit results for Triumph for the June 30th, 2023 year end.
To start off with introductions, my name is Jennifer Olivier. I'm a principal here in Massachusetts working with our nonprofit group. And joining me here in the presentation is Melissa Murphy. Melissa's a manager in our nonprofit group. Both of us have been working on the Triumph audit for a few years, and we'll both be presenting throughout this presentation today. Here's a brief agenda for this presentation. We will start by going through an executive summary, high-level review of the results of the audit. We'll then move into a presentation of some financial statement results for the year. And then at the end, we'll include some required communications that are required to be made between us as the auditor and the organization's board and management.
Right, now next we're going to move into our executive summary.
Here we have the audit services overview. We have your basic financial statement audit. Then we have the audit in accordance with uniform guidance, which is a result of the federal funding you receive. Additionally, there's a report on our considerations of internal controls in accordance with GAS. And lastly, your uniform financial report, which is the required Massachusetts report. There was also one new accounting standard that was implemented in FY23 related to leases. This had a minimal impact on Triumph. Most organizations are evaluating leases, and as a result, you will see a right of use asset and corresponding liability on your balance sheet. However, after evaluation, there really were no material leases that required to be brought onto the balance sheet due to either you owning the building or you do have below market rate leases, which are actually scoped out of this accounting standard and recognized under the contribution standard. All leases, even equipment leases, vehicle leases, are required to be evaluated under this standard. Those were deemed to be immaterial, and that it is why you do not see the asset and corresponding liability on your balance sheet. Nonetheless, we did include a note in note 2 of your financial statements that just tells the reader that this was adopted and evaluated and the results of that.
To summarize here our audit deliverables, we issued a report on the financial statements. This was an unmodified opinion, meaning that everything was fairly stated. Next, we issued a report on internal control over financial reporting, compliance, and other matters. This is often known as a yellow book or GAS report. In this report, we did not identify anything significant to communicate, issuing an unmodified opinion there. Finally, the third report that we issue is the report on internal control over compliance with your major program requirements. This is a uniform guidance report required in the current year. The major program was the Head Start program. Through that testing, there were no findings or no deficiencies noted to report. Finally, we issue a required communications to governance. This is where we are required to communicate certain aspects of our audit, observations. If there was something significant, it would be included in this letter. There's nothing there unusual or significant to report. And finally, in Massachusetts, each year due 11/15 is the Uniform Financial Report. We do provide that report and upload that each year. There was no findings to report there as we walk through the compliance reporting in Massachusetts. Next, I'm going to turn it over to Melissa, who will walk us through the financial information.
Thank you, Jen. On the next couple of slides, I'm going to walk us through the financial statements. Here we have the asset section of the statement of financial position. Overall total assets were $6.7 million compared to $5.4 million in 2022. There was a significant increase of cash of about $785,000. Most of this relates to EEC Workforce Stabilization Grant that continued to come in 2023, and this sits in deferred revenue. So you will see that on the next slide in the liability section. Additionally, there was a significant increase in property and equipment. There were about $750,000 worth of additions in 2023, which was then offset by depreciation expense for an overall increase of total assets of $1.2 million. Moving on to the liabilities and net asset section of the statement of financial position. Total liabilities for 2023 was $1.9 million compared to $1.4 million in 2022 for an overall increase of about $520,000. About $490,000 of that increase relates to deferred revenue, and as I mentioned on the previous slide, the majority of this is the EEC Workforce Stabilization Grant, which you received monthly through 2023. This grant begun in 2022, so there is some rollover from funding received in 2022 as well that you are continuing to spend. Total net assets were $4.7 million in 2023 compared to $4 million in 2022, and we'll see more about that increase on the next slide when we review the statement of activities. This slide includes the statement of activities for 2023 with comparative totals for 2022. Overall, total operating revenue and support was $8.3 million in 2023 compared to $7.7 million in 2022 for an increase of about $530,000. The majority of that increase relates to additional funding received for Head Start, Early Head Start. You received about $5.4 million in 2023 compared to $5.2 million in 2022. Additionally, you have the EEC Workforce Stabilization revenue that was recognized for 2023 included in here, which was an increase of about $200,000 compared to what was recognized in 2022. Total expenses were $7.5 million in 2023 compared to $7 million in 2022 for an increase of about $440,000. The majority of that increase relates to a significant increase in salaries, benefits, and payroll taxes of about $380,000. Additionally, as I mentioned, there were significant fixed asset additions in 2023 as well as 2022. So you saw an increase in your depreciation expense of about $53,000. Total income before your donated rent was $810,000. There is a small loss on property and equipment disposal of about $11,000, which brings you to your overall change in net assets for 2023 of $764,000 compared to $612,000 in 2022. So an overall increase of about $150,000 compared to 2022. Lastly, we have the statement of cash flows. You can see net cash provided by operating activities was $1.6 million in 2023 compared to $1.2 million in 2022. The net cash outflow for purchases of property and equipment was $750,000 compared to $711,000 in 2022. And then your net cash outflow for the repayment of long-term debt was $70,000 compared to $65,000 in 2022. Your overall net increase was $785,000 with your cash ending balance at 6/30/2023 of $2.2 million.
Next, we will just do a brief overview of our required communications. are required communications related to internal control matters. First, just a reminder is that our responsibility is to express an opinion on the financial statements, not on the effectiveness of internal controls. Our consideration of internal controls isn't designed to identify all deficiencies in internal controls that could be material weaknesses or significant deficiencies, but if something did arise, we would communicate that with governance. For definition purposes, a material weakness is the reasonable possibility that a material misstatement would not be prevented or detected or corrected on a timely basis, and a significant deficiency is less significant, but issues that we would deem significant enough to merit the attention of governance. We did not have any material weaknesses identified this year. And moving through our required communications, just a few items here to highlight. Our responsibility is to express an opinion on the fair presentation of the financial statements. We plan and perform the audit to obtain reasonable, not absolute, but reasonable assurance that the financial statements are free of material misstatement. We do evaluate the internal controls over financial reporting. We take a risk-based approach to our audit, and whenever a significant matter arises, we would communicate those to the appropriate parties. Our audit did progress through the planned scope and timing without any issues this year. There was nothing really of significance to note there. And finally, just a reminder here at the bottom that our financial statements are only to be used in their entirety. If there was ever a need to issue our financials or a portion of our financials, such as in an annual report, we do just request that you receive our approval so that we can review that document before it is published. There is some supplemental information that accompanies the financial statements. That's a Schedule A and B Uniform Financial Report. That is a responsibility of management. It's presented for additional analysis. It's required by the Operational Services Division in Massachusetts. It's not a required part of the basic financial statements, and therefore it's not been subjected to the same auditing procedures that we apply in the basic financial statements. For the government auditing standards, we do have that report on internal control over financial reporting and compliance. That is the requirement under the government standards, so it's in addition to our standard basic financial statement report. We did not have any difficulties encountered in performing the audit. We did not discuss any significant issues. We did not have any disagreements with management. We're not aware of any consultation with other auditors, and we didn't have any other findings or issues that we communicated with management this year.
Management is responsible for the accounting policies, which are outlined in Note 2 of the financial statements. I previously discussed the adoption of ASC 842, which had a minimal impact on Triumph financial statements. There were no other significant changes in the accounting policies during the year, and they were deemed appropriate. Also, there were no unusual transactions occurred. Significant accounting estimates is an area of focus under our risk-based audit approach. There are a couple significant estimates that we identify, which is consistent with prior years. The useful lives of property and equipment, functional allocations of expenses, the estimate of allowance for doubtful accounts and pledges, and the contributed services and property. We reviewed these and noted no indicators of management bias. Estimates do appear reasonable.
Final couple of communications here. Management did provide some representations to us. That was the last piece of audit evidence that we obtained in order to finalize our report. We did have no uncorrected misstatements identified this year. We did have some corrected misstatements as noted on this slide. Those were standard annual entries that are made around the time of the audit. Thank you for your time and attention in this presentation. Our contact information is here. Melissa and myself are always available by email or phone for any questions, comments, or feedback that you may have. Thank you for choosing CLA for your audit services.